to this Myanmar and Rohingyas. Second one on the economy, though I have uploaded one editorial, 5.7% GDP that pertaining to one capsule, though we have uploaded on Saturday, but still we will deliberate on this because it has thrown many issues. Then one more thing is, there is one article pertaining to preservation of the natural capital. We are going to deliberate what is the difference between physical capital, human capital, natural capital, like that. Then one more issue also we will deliberate, that is pertaining to consolidation of banks, pros and cons. If you look at economy, even from essay perspective also, India is not able to reach 10% or at least 8% growth rate. This is one issue. Second issue is high non-performing assets. Third issue is consolidation of banks, pros and cons. So these things are very, very important. Now let us look at the first one. So 4 issues we are going to deliberate in this editorial. The first one is on Rohingyas. This is the Rakhine province of Myanmar, which has got border with Bangladesh. Because of persecution, several Rohingyas already migrated to Bangladesh during the past several years, but now several Rohingyas are migrating to Bangladesh because of the prevailing situation in Rakhine state. Under these circumstances, let us throw some light. It is basically Buddhist country. The religion is Buddhism. I am talking about Myanmar, and here currency is kyat, and 2-3 important points, don't forget. The constitution was drafted by the military, and article 59F says anyone with the foreign children is ineligible to become president. That's why Tingya is the president and Aung San Suu Kyi is the foreign minister or state councillor, but she is the real head, please do not forget. 25% of the seats in parliament reserved for military. Military means unelected armed forces, and 3 important powerful ministries are headed by the army. So commander in chief will nominate Home Ministry, Defense Ministry and Border Affairs Ministry. So that's why the army's say in the Myanmar's affairs is quite predominant. And if you look further, Rohingyas belong to Muslim sect, and they are one of Myanmar's many ethnic minorities, and Rohingyas say that they are the descendants of Arab traders. They are there probably from 9th or 10th century. They are the descendants of Arab traders, and they have been in the region for generations, but Myanmar government sees them otherwise. What Myanmar government says, they are illegal migrants from Bangladesh. The country has denied them the citizenship as per the citizenship law of 1982. This Rohingyas are denied citizenship, and Myanmar is predominantly Buddhist country, and the country has got long history of communal mistrust. There are several ethnic groups in Myanmar, and the country has been under the military rule for several years, and this mistrust was exploited by the army for the past several decades. This is all about the factual information on Rohingyas. Then what is the origin of recent clashes? Recently, militants suspected to be from one organization of Rohingyas attacked military and police outposts. Subsequently, the military crackdown followed, and this was condemned extensively around the world because the military crackdown is disproportionate. No doubt the Rohingyas have done some damage to military and police outposts, which led to loss of lives also, but the reaction from military is somewhat disproportionate, right? And the government is almost silent. Now what the world community is doing, the United Nations Human Rights Office stated that the crimes are against humanity. Next point is, it has even rebucked Aung San Suu Kyi's office. And another important aspect is, the international press is not allowed to visit these areas, and people are coming to the conclusion after looking at the satellite pictures when some villages are burning, and 10-member ASEAN group has got the rule of not criticizing each other in their internal affairs. However, some of the countries like Indonesia, Malaysia expressed their protest in feeble voices, but International Organization for Migration has called for additional aid to cope up with the Dhaka's refugees situation. Now thousands of people are migrating to Bangladesh. What about Aung San Suu Kyi, who got Nobel Peace Prize? Conspicuously, her silence indicates her support to the majority religion, right? She is not just the foreign minister, but she is the Nobel Prize winner, and she failed to accept any moral pressure, secure humane treatment. This is the irony, right? But one point to notice, enormous powers are vested with the military, but even then Aung San Suu Kyi, the champion of democracy, is silent. This silence indicates her indirect support to the majority Buddhist religion. Right, this is all about Rohingyas. I thought that it is better to discuss 5 minutes this issue. Next one, very important issue. Probably some of you might have seen my capsule of last Saturday. It was deliberated in detail about the reasons for 5.7% growth rate, and here this article by Ajit Ranade, this has thrown lot many important things. So I decided to discuss this. In spite of the positive macroeconomic environment, we are yet to see the sustained growth rates of 8 to 10%. Here it discussed what is the positive macroeconomic environment. At the same time, it discussed what is the ground reality in the country for the past 1 year or 1.5 years. These aspects you can infer from this article, and after this you can go through the capsule which was uploaded on Saturday, so that if you go through these two, I think the material will be sufficient even for writing the essay or for any group discussion or for writing any type of question on the India's economy, which is now at its lowest in recent times at 5.7%, right. So the article which I produced, the capsule which I produced, and this article, there are some differences in the sense the matter which was produced here talks about macroeconomic environment, conducive environment, and what are the ground realities. These are discussed in this Ajit Ranade's article, and the capsule which was uploaded, it talks about what needs to be done to reach the growth rates of 8 to 10%. So combining together, probably you will have a lot of material for writing any type of question. Here the growth rates for the past 6 consecutive quarters have gone down. You see 9.2%, 7.9%, 7.5%, 7%, 6.1%, 5.7%. You see there is a consecutively. In fact, the growth rates started plummeting much prior to demonetization. This is the important point to note. So much prior to demonetization, growth rates started plummeting, and for the past 6 quarters, in fact, they are sliding. What is the conducive macroeconomic environment? The point to note here is, in spite of macroeconomic environment, the growth rate is sliding. You see, inflation is moderate. It touched a new low of 1.5% recently. Second one is trade deficit is moderate, fiscal deficit is moderate, and it is manageable. Repo rate was cut by 2 percentage points from 8% to 6% during the past 2 years or so. And foreign portfolio investment, foreign direct investment are at their peaks. They are flowing into the country. Country is having lot of dollar liquidity, and stock market index is at all time high, oil prices have been stable and comfortably low, monsoon is normal. So, of course, monsoon is normal, but there are some regional variations. In spite of all these favorable factors, we have not managed to convert them into higher growth rates. The important point to note is not only now, for the past 1.5 years, growth is sliding in spite of macroeconomic conducive factors. Let us discuss manufacturing growth at 1.2%, and this shows the ground reality. The solutions were not seen from this article, or otherwise these disadvantages must be converted into an opportunity to remove these disadvantages. So, that way you can infer, but this article talks about what is the ground reality. Here you see manufacturing growth is at 1.2%. Manufacturing growth at 1.2% is the lowest in 5 years, and this is the lowest since we switched over to the new methodology based on GVA. What is the difference between GVA and GDP? Please look into the capsule which was uploaded day before yesterday. And some of this was probably caused by the suspension of manufacturing prior to GST, or you can say in transition to GST, some of the manufacturing activities might have suspended in the first quarter of this financial year. That may be one reason to reach this lowest ever 1.2% during the past 3 years. Another important aspect is, if you look at the 5 months of this current financial year, the bank credit shrank by 1.8%. Unfortunate aspect. Bank credit, it has to grow by at least 2 to 2.5 times the GDP, but it shrank by 1.8%. At the same time, it is the lowest in 13 years. And if you remove retail loans such as housing and other personal loans, or you can say if you look at the corporate loans only, it is probably much shrinking. The credit offtake from the banking system is shrinking, so it casts a shadow on the GDP growth. Shrinking of this credit offtake from the banking system is the serious affair in any economy. The annual credit flow from the banking sector for the previous fiscal was multi-decadal low. Probably we have seen that type of credit flow, that means that low percentage of credit offtake only in 1950s and 1960s. Incidentally, you see, the credit growth for the year ending March was the lowest in 63 years, right? And this is as per the SBI report. State Bank of India stated the credit growth for the year ending last March was the lowest in 63 years. So, it shows all is not well with the economy. Second point is low investments, fixed capital formation. I told you number of times, gross fixed capital formation, which is nothing but investment expenditure. This is not growing on the expected lines, and the private sector component for the past several years is growing at 1.5%. That means when the economy is growing at around 7%, 8%, but when the private investment is growing at just 1.5%, what it indicates? It indicates that the share of the private sector investment in the overall GDP is reducing. So, this investment expenditure is between 30 to 35% as per the author, and it is coming down. But the point to note here is it is around 28 or 29%. It is expected to be around 35%, but it is now 28 or 29%. So, the point to note here is gross fixed capital formation is coming down, or otherwise investment expenditure is coming down in spite of Make in India, in spite of ease of doing business. These things are happening. Then there are several opportunities, say housing for all, smart cities, digital India. There are several opportunities. but still this investment expenditure is not increasing. Now of course, we discussed number of times about a twin balance sheet problem because of corporates, because of the stress in the loans taken by the corporate sector, especially in sectors like steel, infrastructure. There is a twin balance sheet problem, and now we have to wait and see whether insolvency and bankruptcy code will bring the people, will bring the companies as well as banks out of the stress. Then strengthening of rupee definitely will benefit the imports, but because of strengthening of rupee, the exports are affected. As per the author, you see, the rupee is strengthened by 7% against US dollar. The other currencies are also gained against dollar, but not this much. They might have gained by 4%, 5% like that, but Indian rupee gained by 7%. And exports since last October, they have shown positive growth after 18 months of negative growth prior to that. But because of strong rupee, the strength is now weakening, or you can say the exports growth is now weakening. In January, exports are up by, since January, the exports are up by 12%, but imports are up by more than 30%. Here you see, strong rupee hurts the domestic industry in two ways. What are those two ways? One way is it affects the exports because a strong rupee makes them globally uncompetitive. There are several other reasons for it. I am not going into those reasons. The second thing is imported goods becomes cheaper, so that it affects the domestic industry also. So two ways, strong rupee affects the exports as well as it affects the domestic industry because of cheap imports. So this is what is added, and the introduction of GST resulted in added advantage to the importers. How? You see, previously countervailed duty is there. Countervailed duty, or you can say countervailing duty, was now replaced with GST, but with the introduction of GST, they can get this input tax credit also. So that advantage has caused to imports. So because of rupee strengthening, 3-4 things are happening. One is exports are affected because of less global competitiveness. Of course, there are other ways of improving the global competitiveness. I am not going into those details. Second one is because of cheaper imports, domestic industry is affected. Then third important point is this countervailing duty is subsumed into GST, but GST has got an element of input tax credit. So because of input tax credit mechanism, some of the imported products are becoming cheaper. Then some people say that our exchange rate should be stronger because India is a net importing country. But the point to note here is, if you remove the imports like gold, which are non-essential imports, the remaining imports, which you can say, if you look at the essential imports, then the trade deficit will be much smaller. So if you exclude non-essential imports, then the trade deficit will be much smaller. So there is not much argument in this to have the stronger exchange rate. So the rupee needs to be weakened as per the author, or otherwise it will affect domestic manufacturing in two ways, as I have already told you. Then the next one is demonetization. Demonetization might have affected. Here you see, the first half of the last fiscal year, the GDP growth rate was 7.7%, but now it is 5.7%. GDP growth reduced by 2% after demonetization. If it is because of demonetization, Dr. Manmohan Singh is probably true. But there are several other factors for reduction in the growth rates, because we are seeing a sliding in the reduction in GDP growths for the past 6 quarters. The negative impact on the informal and rural economy, of course, cannot be underestimated. Investment and consumption spending which was postponed due to cash transactions limits might recover in future. But one important aspect, this I have explained on Saturday in MCQs also, the agriculture GDP shows nominal GDP lesser than real GDP. What does it indicate? When the real GDP is more, that means normally if you are talking nominal GDP is more than real GDP. Please understand carefully, normally nominal GDP is more than real GDP. By using GDP deflator, we calculate real GDP. But in the agriculture for the last quarter, what happened? The real GDP is more than nominal GDP. That indicates that the agricultural prices are under deflation or deflation in agricultural prices. So, that is one of the reasons for the farm crisis in recent times. A lot depends. So, what needs to be done? A lot depends on the manufacturing and private investment spending, and the structural reforms like GST, bankruptcy and insolvency code, Aadhaar linkage will certainly show results in the medium to long run. But the need of the hour is to inject immediate stimulus to get at least 8% growth as per the Aadhaar. In the capsule which we produced, we have listed various steps what needs to be done. Please view that capsule. In addition to this also, there are several important aspects which can be understood from these articles. One is subsuming countervailing duty into GST, how it is making imports cheaper. Second point is agricultural real GDP growth is more than nominal GDP. What does it indicate? Like that several concepts are cleared through these articles. So, please view economy articles clearly so that they will benefit a lot in the preliminary also, and clear aspects about economy will definitely make you understand various other concepts clearly in economy. Then the third one, most important it appears to be here. Several important aspects are covered, and the question here is natural capital can maximize the benefits of economic growth and development. Critically examine. Natural capital can maximize the benefits of economic growth and development. First of all, you should understand what is natural capital. You see, we are talking about physical capital. Physical capital means this land, this mining, all these things are physical capital. So, physical capital, you may have one house, that is physical capital. Then human capital, you have high intellectual brain, doctors, then engineers, all these are examples of human capital. So, physical capital on one side, human capital on the other side. The author talks about natural capital. What is natural capital? Natural capital is the natural ecosystem like forests as well as wetlands. All these things comes under natural capital. So, preserving the natural capital will go a long way to benefit the country. That is what the author argues. Next one is social capital. So, this is the example of social capital, that is diversity, then of course networks, then as a citizen everybody has got lot of power, then participation in the nation building or developing the social groups. So, these are all examples of social capital. So, physical capital, human capital, natural capital, social capital. So, the question here is natural capital can maximize the benefits of economic growth and development. Critically examine. Right here India and the natural capital. Here India has got 11% of the world's flora and fauna. What is the meaning of flora and fauna? Please look into this. Various plant species is flora, various animal species is fauna. So, flora and fauna, these are the terms quite critical, quite frequently used. So, here India has got 11% of the world's flora and fauna, and at the same time India is also one of the 17 most ecologically diverse countries, and these biomes contribute billions of dollars to the Indian economy. What do you understand by biome? Biome is large naturally occurring community of flora and fauna, or you can say for example a forest you can say. So, a forest is an example of biome, and these biomes contribute billions of dollars to Indian economy annually. And financial value of India's forests, the India's forests have got lot of financial value which encompass economic services. Lot of economic value is derived from the natural ecosystem. That's what the author wants to point out, in the form of timber and fuel wood, ecological services such as carbon sequestration. Forests is giving us lot of fuel wood, timber, but forests are valuable for carbon sequestration, and this total benefit in India is estimated to be $1.7 trillion. So, it indicates there is a need for preserving the natural capital of any country as a whole, right. So, here what is a carbon sequestration? We have seen these forests are in the forefront for ensuring carbon sequestration. Now, the question is, what is the meaning of carbon sequestration? Here you see it is the long term storage of carbon in plants, soils, geological formations and oceans. So, the storage of carbon in the long term, that is in plants, soils also absorb some carbon, or you can say long term storage in soils, at the same time geological formations, and at the same time oceans. So, these will act as reservoirs of carbon, so that they preserve carbon for generations. That means they do not leave that out. It occurs both naturally, this carbon sequestration or carbon storage takes place. At the same time, because of anthropogenic activities. What is the meaning of anthropogenic? Anthropogenic means because of human activity, please do not forget. At the same time, it also refers to the storage of the carbon that has immediate potential to become carbon dioxide. So, nowadays lot of emphasis is given for carbon sequestration. Here you see through land use and forestry, because if you develop a forest, then that will lead to absorption of carbon, or you can say carbon sequestration. And at the same time, in some power plants, for example a power plant in Canada, this carbon capture and storage is implemented. This carbon capture and storage, that means the carbon coming out of the power plant, or you can say the carbon dioxide coming out of the power plant is captured and put it underground. So, these are all examples of carbon sequestration, right. Now, natural capital on the decline. How can you say natural capital is on the decline? Because over the globe this is evident because of the advancement of Earth Overshoot Day. What is the meaning of Earth Overshoot Day? We will come to it a little while from now. With increasing economic activity, natural capital is on the decline. We are destroying the forests. At the same time, we are destroying the natural wildlife, natural flora, natural fauna, and all these things are leading to the declining economic or declining natural capital. It directly affects the quality of life and gives rise to future inefficiencies in the economy. So, what is the meaning of Earth Overshoot Day? This is the calendar day this year. It is on August 2. That means by August 2, we have consumed, that means during the first 7 months, we have consumed the amount, the natural planet can recover, or you can say the earth's capacity to regeneration throughout the year. Please understand carefully, this earth overshoot day concept is the earth's regeneration capacity. The earth's regeneration capacity is totally consumed. The earth's regeneration capacity is totally consumed in 7 months only. Right? Please look into this. By August 2, this year 2017, by August 2, this we consumed the total capacity of the earth regeneration. That means from August to December, whatever we are consuming, that will not be recouped. That is the meaning of earth overshoot day. Previously, if you go back to 1990, it was November 1st. That means at least the regeneration capacity of the earth was there for 10 months. But now it is consumed in 7 months. That means we are doing over exploitation of the natural resources. If you go back 25 years, the earth's regeneration capacity was consumed in 10 months. And if you go back to 1960s, in fact, we have not consumed the total regeneration capacity. So it spilled over to January, February. That means after the consumption because of anthropological activities, if you go back to January, if you go back to 1960s, in fact, we got surplus there. But now, within 7 months, we consumed total regeneration capacity of the planet. It indicates that we are over exploiting. So, this earth overshoot day, this indicates by August 2 in 2017, we used more from nature than our planet can renew in the whole year. So, this indicates we are using more ecological resources and services than nature can regenerate. That means we are exploiting by around 180%, or you can say if 100 is the regeneration capacity of the planet, we are using around 160 or 170 because this is consumed in 7 months. The human activities include overfishing, then over harvesting forests and emitting more carbon dioxide into the atmosphere than forests can absorb. Right? If you see in 1987, this earth overshoot day was on December 19 and now it is August 2. That means we are over exploiting the resources, and this is released by Global Footprint Network. We discussed about earth overshoot day and this is released by Global Footprint Network. You may have a doubt, what is this Global Footprint Network? It is an independent think tank originally based in 3 countries, and it is a not for profitable charitable organization, and it develops, promotes tools for advancing sustainability, including the ecological footprint and biocapacity. So, this Global Footprint Network, this is behind this global overshoot day. So, let us leave this discussion here. So, the next question is, what will happen if we cross the limits of natural capital stocks? So, what will happen if we cross the limits of the natural regeneration? We have already seen by August we are consuming everything which can be regenerated in a year. So, this indicates that it will have cascading effects on the economy, environment and society. All of us are seeing high intensity rainfall days, changing weather patterns, accelerated extinction events. That means a certain flora, fauna are being extincted. Global weather is changing fast. The temperatures, heat is rising, and the highest temperature days are recorded after 2015 out of 16 years are high temperature, or you can say high heat years. So, because of all these things, you can say that we are over exploiting the nature. Scientists have identified 9 earth system processes to have boundaries which mark the safe zones. That means scientists have identified 9 earth system processes where boundaries are to be fixed, but unfortunately out of those 9, in 4 we have already crossed. What are those 4? Those 4 are climate change, loss of biosphere integrity, land system change and altered biogeochemical cycles like a phosphorus cycle, nitrogen cycle. So, that means human activity has already altered the balance of delicate equilibriums. The article we are talking about is with regard to the protection of natural capital. So, what needs to be done? Through thorough natural capital assessment is to be put into the risk management committee deliberations of the governments as well as companies. Then the projects can be reassessed on the basis of their vulnerability to impacts and dependencies associated with the value chain. Then natural capital thinking creates opportunities to innovate further, to go for more efficient technologies. So, the need of the hour is intangible nature of natural assets must be protected, must be preserved, and we should not destroy the natural habitats, right. So, this is the final point. So, this article has thrown lot many interesting things about carbon sequestration, global overshoot day, global footprint network. These things please do not forget. Let us look at one economy important article. This is not editorial. This appeared in the economy page of the Hindu. Banks kappa to brew with mergers. Two things I would like to tell you. In Times of India, series of articles are appearing with regard to uniform civil code. Then another thing is class action suit. This appeared last Monday in the Hindu in the editorials, because that assumed significance because of several boardroom battles are going on and subsequently the stock prices are crashing. Under these circumstances, that class action suit assumed a lot of significance. One of our friends suggested to discuss class action suit. So, this uniform civil code as well as class action suit I will try to complete either as capsule or in the editorial discussion before this weekend, and this is very important because by the time you write this year mains also, this bank's consolidation is one important issue, and of course banks non-performing assets, insolvency and bankruptcy code, these are important issues. We had number of discussions on those things. Now this issue we have not yet discussed. This issue is with regard to banks consolidation. What are the pros and cons? Here enumerate the pros and cons of consolidation of public sector banks. Here you see, you are seeing the logos of some of the weak banks. This Dena Bank, Indian Overseas Bank, Bank of Maharashtra. These are examples of some of the weak banks, some of the banks which have some sort of good reputation, or you can say strong banks are examples of this Canara Bank, Bank of Baroda, to some extent Punjab National Bank. These things you can assume as somewhat strong banks. Some of them have got higher non-performing assets, but not only non-performing assets, capital adequacy, profitability, these are the things when one looks at strong bank or weak bank. So, these are examples of weak banks, these are examples of strong banks, and three things which differentiate between weak bank and strong bank. What are the three things? One is gross non-performing assets, of course. The second one is with regard to the capital adequacy. The capital adequacy prescribed as per Basel norms is 9%, and some of the banks are almost at the threshold of 9%. And government's support is immediately required for some banks. Then the third important aspect is the return on the assets. How much percentage of return the banks are getting on their assets. That is the third measure of the banks, whether the bank is healthy or unhealthy. So, based on these three parameters, banks are classified as weak banks or strong banks. Here, why the government is pushing for mergers quite vigorously now? In fact, the consolidation of public sector banks is not the new paradigm. In fact, it was suggested in early 1990s as per Narasimham Committee recommendations. Now at present in our country, SBI plus 20 public sector banks are there. SBI you leave it aside because already 6 banks were merged with SBI recently on April 1. 5 associate banks and Bharatiya Mahila Bank. Leave that SBI, leaving SBI, 20 public sector banks are there. Now we are talking about the consolidation of public sector banks, or you can say the merger of weak banks into strong banks. Right. Why it assumed a lot of significance now, or you can say why the government is vigorously pushing now only, but not a year ago or 2 years ago. First point is the gross non-performing assets increased enormously for some of the public sector banks, and out of 20 PSBs, 9 have impaired loans in excess of 20%. What are impaired loans? That means the loans which are impaired, or you can say stressed. What is the meaning of it? They became already non-performing assets, that is one part, and in due course of time they are expected to become non-performing assets. For example, restructured assets, because there is every possibility in the restructured assets they may become this non-performing assets in the years to come. The share values of several public sector banks are trading at a discount to their book value. You see, the share value, book value is something. So, they are trading at a discount. That means the market value of the shares for several public sector banks is much lower than their book value. That means they lost their share values in recent times. Normally, they are expected to be above the book value, but unfortunately, they are below the book value. Investor appetite for PSU bank shares is low. Now, there is not much, literally no demand for the investors, or you can say from the investors, there is no demand for public sector banks shares except LIC. LIC is investing in public sector bank shares because of probably the mandate or dictate from Government of India. Then banks are not in a position to acquire capital for ensuring capital adequacy ratios. CAR is to be maintained 9% by March 31, 2019, and government is not giving much money. Government told the banks, please obtain that money from the market, but the public sector banks are not in a position to acquire capital for ensuring capital adequacy ratios. Then actions by Reserve Bank of India and government which gives telltale signs. In fact, with regard to this consolidation, telltale signs were given for the past 6-7 months or so. There are 2 actions which clearly indicate that the government is contemplating on the consolidation. The first action is by Reserve Bank of India. What the Reserve Bank of India has done recently, Reserve Bank of India revised its framework of preventive corrective action, preventive corrective action PCA. Recently from April 1, 2017, Reserve Bank of India has revised its guidelines for preventive corrective action, and accordingly it kept almost 6 banks under surveillance, you can say, under preventive corrective action. So, these guidelines of preventive corrective action are modified from April 1, 2017, And now based on this framework, 6 banks were kept under surveillance by Reserve Bank of India. Here based on capital, as I have already told you, based on asset quality means non-performing assets, capital means the capital adequacy ratio, profitability means returns on the assets or ROA. As I have already told you, based on these 3 parameters, already Reserve Bank of India kept 6 banks under preventive corrective action or PCA. This itself shows that government is thinking seriously on consolidation. So, one is PCA, the banks were kept under PCA by Reserve Bank of India. This PCA is very important from examination perspective, both from preliminary and mains. Then the second point is Government of India told for capital adequacy only 10,000 crores will be given this year, and next year also only 10,000 crores. Last year it has given 25,000 crores. You may have a doubt why government is giving money to the banks for ensuring this capital adequacy. The point to note here is majority shareholder is government. That's why government has to give some money for ensuring capital adequacy, but the government told we do not give much money, that too we will give very less amount of money based on certain parameters or certain benchmarks. So, this itself indicates government's support is going to come down day by day. So, these 2 actions are clear telltale signs that something of this sort is going to happen in the future. So, this preventive corrective action is very important, and this capital adequacy ratio, this also very important. Right, this is about preventive corrective action. Around 6 banks were kept under preventive corrective action. Now, what is the procedure for merger? Procedure is also clearly defined by the Finance Ministry. Why Finance Ministry? Because banks comes under Department of Financial Services, Ministry of Finance. Please do not forget. Boards of the banks, there is clear let down procedure given. Boards of the banks first clear the decision to merge. That means the proposal has to come from bank board. That will be put up to alternative mechanism, which was recently agreed upon in the cabinet. So, it will be put up to alternative mechanism, and after getting the in principle approval of alternative mechanism, banks will take steps in accordance with the law and SEBI requirements, and then the final scheme will be notified by Government of India in consultation with Reserve Bank of India. And here another important aspect is approval, which is normally required in mergers. When big mergers are taking place, Competition Commission of India approval is normally required, but now the government has done away with. That means in this particular case of mergers of public sector banks, Competitive Commission of India approvals are no more required, but this is the procedure enunciated, right. Now, advantages of consolidation of banks, or you can say pros, then cons or disadvantages. With these 2 things we can come to conclusion of today's editorial discussion. The first one is advantages of consolidation of banks. Bigger bank will be able to fund large infrastructure projects. When the bank size is bigger, it will be in a position to lend big ticket projects. Then it brings more efficiency in treasury operations. What is the meaning of treasury operations? Treasury operations are nothing but how the bank manages day to day liquidity. When the bank's size is big, it can rationalize its operations as far as treasury is concerned. So, treasury operations means nothing but managing day to day liquidity, managing its investments, and managing the money market instruments. That means for short term borrowings, short term lending to other banks, all these things comes under treasury operations. Please do not forget, banks operations normally looked at three ways. One is treasury operations. Banks also invest in stock market. So, banks investments as well as money market, as well as liquidity, as well as foreign exchange deals, these are all coming under treasury operations. Then retail operations, small loans like people like you and me. So, retail operations are that. Then wholesale operations means corporate banking. So, banks operations comes in these through three ways, or you can say banks income comes in these three ways. Now, it can trim operating costs when the size is big, it can rationalize the banks, it can rationalize the staff, and subsequently operating costs can be trimmed. Consolidation will benefit growth of deposits, especially CASA deposits. CASA means current account, savings account. Current accounts means deposits of the companies. That is very much advantageous to the bank, because of the reason they need not pay interest, because this current account deposits carry 0 interest. Savings account, now most of the banks are at 3.5% interest. Current account, they need not pay interest, it is 0% interest. So, banks will have much more advantage with CASA deposits. Then they can improve, or you can say they can go to high end technological upgradation. A small bank like Punjab and Sind Bank, Bank of Maharashtra, Andhra Bank, they may not be able to reach high end technological upgradation, because that is the need of the hour. If high end technological upgradation is not there, youth will not come to that bank. At the same time, corporates will not come to that bank. Only big banks can look at this high end technological upgradation. Credit appraisal mechanism. That means when the big ticket loan is given, 500 crores, 200 crores, something like that, proper mechanism must be there which can assess whether the borrower will pay back or not. So, credit appraisal mechanism will be much better for bigger banks. Then they can establish overseas operations also. They can take, or you can say they can mobilize a lot of money overseas also. Because if the banks are mobilizing money overseas, normally the interest rate will be less, and they can have evenly presence across the country. Now, some of the banks have got major presence in some locations, and they can have evenly of operations, or you can say evenly presence of operations across the country if the size is big, right? What are the disadvantages? You see, we are thinking of consolidation of the banks already affected because of high impaired assets. We have already seen for 9 public sector banks, impaired assets are more than 20%, right? So, under these circumstances, you have to view that when the bank is merged with other bank, the balance sheet will be further affected. You see, we got a bitter experience of merger of failure, or you can say we have got bitter experience of the merger of Global Trust Bank, which was into losses, into Oriental Bank of Commerce in 2004. Subsequently, it dragged the balance sheet of Oriental Bank of Commerce for several years. So, the point to note here is when weak banks are merged with the somewhat stronger banks, because you cannot say some of them are really stronger, because almost all the public sector banks are affected because of gross non-performing assets. So, you cannot classify that some are extremely healthy banks, they are also affected because of several reasons. So, under these circumstances, we have to look at how the balance sheet of the merged entity will look like. Then it may create lot of complexities like lesser core capital, then high net non-performing assets, branch rationalization may be problem, because some of the bank branches may be in the close proximity. However, if the rationalization is done, then certainly it will be beneficial to the bank, but the real challenge lies in bank rationalization. At the same time, human resources productivity may be reduced. You see, various banks have got the work culture is different. If you are merging some bank of South India with North India, there may be cross cultural work culture differences. Because of cross cultural differences, what happens? Merger may not be perfect. So, like this, there are several problems. SBI, following its merger, recently 6 banks were merged with SBI. Now the now the non-performing assets increased substantially from 7% to 10%. So, always bigger means may not be that much which looks bigger. There may be some hidden problems also. We have discussed pros, we have discussed cons. Under these circumstances, for some more time, even after merger also, government's support may be required. That is one aspect. Second aspect is, as early as possible, non-performing assets must be resolved. Of course, this insolvency and bankruptcy code may come to the rescue. Already 12 big ticket loans were referred to National Company Law Tribunal. So, this is all about the pros and cons